Inflation showing no signs of cooling as Americans are forced to pay more than ever for goods and services. The most recent consumer price index released Wednesday showed prices have increased 9.1% since June of last year. But in a surprising contrast, people still seem to be outspending their cash regardless of how much things cost. New numbers out today show furniture store sales up nearly 1.5% in June. Restaurant sales also up 8%. Electronic stores also seeing a rise, and online shopping posting a more than 2% increase. Inflation also affecting Social Security payments. The cost of living adjustment for those who collect Social Security benefits could increase by over 10% next year. The exact amount, of course, remains to be seen, but that could be a really big boost. So joining the conversation now, editor-in-chief at The Balance, Kristin Myers. Kristin, thank you so much for joining us this Friday.
Thanks for having me.
All right, so let's start with the stock market. We know stocks really ended the week much higher after that unexpectedly positive retail sales report. A little bit of a rough start, rough middle. But what does that tell us about the prospects for an economic recovery?
Yeah, rough is putting it mildly, I would say, for what we've been seeing in the markets lately. But when it came to the retail sales, as you're mentioning, it was higher than expected, 1%. Economists were essentially forecasting a 0.9% increase. But the U.S. economy, for those that don't know, is made up 70% of consumer spending. So that's a huge amount of the U.S. economy that really relies on these retail sales. And that's why this figure is so important, because if consumers, if you and I and everyone else continues to go out and spend our money, continues to go out shopping at stores, what it means is that the U.S. economy can continue to grow and can continue to stay strong. So for those that are really anxious or very worried about a recession, this retail sales number should really put some of those anxieties a little bit at ease. Now, when we see those retail sales dropping consistently for several months, that's when folks should really start to get worried.
Okay, Kristin, you know, we see that the retail sales, better than anticipated. Consumer confidence obviously moving higher, but it still overall remains low. So what does that mean?
So this is such a good point, because consumer confidence came in for July at 51.1. That was the print reading. It was actually better than expected. Also a bit of a surprise there. But as you're mentioning, in reference, last year, it was over 80 points. So we're still a little bit about halfway to that number that we were last year. And that's just a fact of inflation right now being over 9%. Americans right now are still getting battered and bruised every time they go to the store and every time they have to open up their wallets and spend more on groceries, spend more to fill up their gas tanks, And so right now we see Americans not feeling too great, but because we are seeing unemployment still incredibly low, folks are still have money in their pocket, they're still getting incomes, they're still getting pay raises. They're not doing too bad, just not as well as they were doing before.
All right, we want to get to that Social Security topic. This new report suggesting Social Security payments could jump next year, maybe as much as 10%. It's a record cost of living adjustment. But the question, can the agency afford that? Especially because, there are reports that millennials may never get to collect on the Social Security that they're currently paying into.
Yeah, this is absolutely true. So can the Social Security Administration afford this payment? For now, the answer is yes. The question is, for how long can they maintain some of these payments? As of right now, Social Security is actually going to expire in 2034. So we've only got a little bit over a decade worth of funds left in Social Security. So it's not going to last forever. And as you're rightly pointing, definitely not going to last for millennials or any other generation that is younger in their retirement years. And that's why it's so imperative to make changes right now to Social Security. Either the administration needs to cut benefits, which of course no one wants, especially as the cost of living continues to go up, or we might just have to raise taxes or do something about the ways we fund that pension system.
Yeah, we certainly have to figure something out. There's a lot of people paying in that want to see some of that return. All right, Kristin, thank you.
Of course.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.